The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 9th, the Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Gosh darn. Let's make sure that we do. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find a gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off to Steve at TFNN.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So we got a rally going on with the exception of the transports. Now, 24 points, S&P 32, 151 for the NASDAQ, 118 for the Russell. Semis 113, 1.5% there. They're the big mover. You've got gold that is up $108, a little over 2%, 7% for silver, 550. Lights recruit up 58 pennies, nearly 1% there. Natural gas back 6.5%, down 22 cents. The 30-year Treasury put out 115.13. So let's begin with, when we were last together, it was on Thursday afternoon because I couldn't make the Friday show. And how I left the show, I believe I left the show, at least during the last segment, I think was this is a head fake. Remember, the market was creaming lower here. If we just take a look at the S&P 500, just stick this up in the upper right-hand corner out here, get that chart up on our screen. We had the market that was just creaming lower on Thursday. Right out here, right? And looked like all holy heck was going to fall apart. I'm pretty sure I was one of the few out there that says this is a head fake. And boy, did it turn out to be a head fake out there. And we got all the signals that we were looking for. They came in, I think, around 7:30 or something like that. I don't remember the exact time out there, but we got all those signals, and that has led to a rally. Now, one of the reasons that I shared with you, that I stated with you that this is a head fake was because we had the New York Stock Exchange at a new all-time high in its advanced decline line. It was a few days back. Look, we got a new one on Friday. And so I had the confidence. The confidence, it's called the probability, really. The probability was, and you might say, what type of probability? I'll tell you, it was a 99% probability that after you get a new all-time high in the first 7 days of trading, that you likely are only going to get a 1% pullback. Maybe you get a 2% pullback. So you got a 98% odds chance, all right? That was what I was sharing with you, a 98% odds chance that what we were looking at was, in fact, a head fake. We just made a new all-time high Friday. We might make a new all-time high in the advanced decline line again. Do you want to understand what the probability would be of a 10% pullback in the first 7 days? What do you think it might be? It's 99% chance that there is less, that there's only a 1% chance of a 10% pullback. So those folks, and I've shared this with you, if you are in such a bearish mindset out there, get out of it. Get out of it until some time passes and we're not making new all-time highs in the advanced decline line. Now, I'm not saying everything is perfect out there because it isn't. In fact, right now, we've got the spot VIX index that is trading above its 50-day exponential moving average. If it gets, that's not an ideal setting for a rally, at least in the S&P 500. So the level that you're watching there is going to be 1690. And if we get a close below 1690, certainly two closes below that 50-day exponential moving average for the spot VIX index, you're going to see a further rally inside the S&P 500. You're not going to see a decline. That much I know. It could be a sideways to a move higher out there. If we take a look at the here's one of the concerns, if you will, at least right now at 11:11 on February the 9th. We have made a new all-time high in the Dow. It's in terms of U.S. dollars. Go ahead and just adjust that out there if I can. There we go. Shoot, that didn't work. So that's today. We have not made a new all-time high in terms of euros. We did make a new all-time high on Friday in terms of yen. We have not in the Aussie dollars. We have not in the krona. We have not in Great British pound. We have not in Swiss francs. We have now, new all-time high today. So we have new all-time highs today in the Dow, priced in Chinese yuan and Canadian loonie and U.S. dollars. What you really need to see, you want to see participation here. You want to see the Dow moving higher in all major currencies. The question to decide that then Basil has his reasons for taking a look at the Dow. My reasons for taking a look at the Dow is because this is where global capital goes. Global capital needs total liquidity out there. We're talking huge sovereign debt funds and so forth. So you take a look at this. We're seeing global capital, most certainly, but we aren't seeing it in its entirety out there. If we get that, then we continue to move higher out there. Now, the signal that also tells us, about the potential of a consolidating market. Let me just switch off of these charts for a moment. I think it's a little bit easier to see here. Now, this new profile will not confirm until this evening. We're taking a look at the NQ out here. So I'm bringing this back. You'll see that the bottom of this profile is down to 24,651. You probably should note that. The center of this profile, we're trading above it right now, is at 25,267. So that would normally have been a level of resistance. It still may be because we're just slightly above that level. But where price inside the NQ is likely targeting right now is its oscillator and change line at 25,445-ish. The top of the profile is at 26,090. This new profile wraps around the prior profile. Not does it wrap around just the prior profile, the prior three profiles out there. Well, the prior two profiles. Let me take that back. The prior two profiles. So that tells us, if you look at the NASDAQ, you can see the consolidation pattern, right? It's visually there. It's apparent. Just take a look at it. Let's just go draw it in for those that aren't seeing it or aren't familiar with a consolidation pattern. But basically, here's your consolidation. We hit the bottom of that consolidation. I'll probably move it up just a tad out there. At the bottom of that consolidation on Friday morning out there. So even if we didn't have a new profile that said that the NQ was in a consolidating market, we've got the consolidation pattern itself. So that is what is taking place right now. It's really important for you to understand that because the NQ is the one that has gotten hammered the most. And it just gave you, or it will give us this, first, it's giving us this message right now. But you'll get double D confirmation come 6:01 this evening when those new profiles go ahead and confirm out there. We also have a new profile that's forming inside the ES Mini, 6682 is support, resistance up at 7,170, which is likely where price is headed to. The Dow equity future contract, it's trading above all resistance, profile, oscillator, and change line. In fact, if you take a look at the Dow, it gave you extraordinary signals out here. It gave us extraordinary signal on Friday morning. Well, really Thursday night, I should say. As the Friday session opened at 6 p.m. because price in the Dow got right down to the 48,702 level. The actual low for the Dow that morning was 48,703. Hey, you got to be kidding me. And that is where counter trend rallies come to an end. And it most certainly did. The Dow now heading up to 51,000 plus in that small A to B equals CD pattern to the upside. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. I've got the chart of the seasonal pattern for the Dow up on my screen here. This is over the last 128 years, 129 years out there. Now, what we've done is we have selected the midterm elections, which is what we're in right now. And this is the seasonal pattern associated with that, which I think the message that we just took a look at inside the NQ, the consolidation pattern signals from the profiles, and that's basically what this chart here is showing. This is showing consolidation to higher with a first top kind of at the middle of March 20th or so, before you get a little bit of a decline into the end of March, then a little bit of a rally into the third week of April, and then we start to decline all the way into October. Now, I can't guarantee you that this is the pattern that we're following, but it sure is looking like, well, we can take a look at this does a decent job. If I compare this pattern to I don't know why it started there, but to 2026 so far for the year, it should show up there. So, and I know it's kind of, but really, I mean, it's just sideways consolidation. I mean, that's what we've got out here so far in 2026. That's the pattern that is associated basically with the seasonal cycle. We've pretty much, you and I, we looked at the S&P 500. I thought for this morning, I put the Dow up there so that you can see that as well. And then one last thing, I shared this with you folks on Thursday as well. I said, go back when I said, hey, this is a head fake. I said, now go back and take a look at the Qs. And I said, look at the volume on the Qs. And the volume on the Qs on the trading session when we made it slow out here was on February the 5th. And the volume on that was over 75 million shares. I kind of use 75 million shares at this moment in time as kind of a benchmark area that once the Qs get up into that kind of volume mode, that is the sign, that is a signal of a bottom. Maybe it's exhaustive selling, whatever you might want to refer to it. But if you take a look at my chart out here, I can tell you that the Qs make bottoms with volume. They make bottoms with volume. Does that mean that they're long-term volumes or they can't get taken out? No, that's not what I'm saying. I'm saying what you and I are doing, or certainly what we're doing during the show here, is we're trying to assess the market, and really more from a shorter term standpoint, if you will, or, what did it just do? So pay attention to those things. Pay attention to New York Stock Exchange, that advanced decline oscillator. Pay attention to the advanced decline line, especially when it's at new all-time highs. I mean, the odds or percentage of a 1%, just a 10% pullback in the next 14 days is less than 1%. Those are substantial odds to assist you in your trading and investing. All right, let's go take a look at the first request that came in. It was from Tom G, who wants to take a look at Broadcom out here. Let's get those charts up on our screen. Give me a moment here. Which is Avgo. Avgo, and Tom says he's concerned about the 350 area. So, Tom, your instinct is pretty good out here. What I have for you at the 350 area would be 354.12. And the 354.12 is the top of the weekly profile. Now, we're looking at the daily. So I just wanted to immediately focus on a value that you had. What is it that I see on my charts that kind of you could correlate with whatever it is that you were looking at and put those two together? Now, when we look at the daily time frame, we are trading right now, or Avgo is trading right now above the top of its profile. 339.99 is the number, at 344. If we close above 339 today and we close above it tomorrow, you will have a bullish profile change in trend. That would be the bottom signal. There's no bottom pattern associated with the. In fact, you've got a confirmed daily A to B equals CD pattern to the downside inside of Avgo. But we're not going there. Why would we not go there? Because we're trading above the top of its daily profile, and that's giving us a bullish signal of a potential bullish profile change in trend. Now, what that tells you, Tom, is that price should make its way to the next level of resistance. That's the 354.12 area. The monthly chart, which has a Rhodes momentum indicator top, a TD9 count top, is traded above its green oscillator and change line, which is as tested and rejected. So its signal is somewhat neutral. But if you can close above 354.12, the next number, 363.69. Above that, the top of its monthly profile, 392.74. To the downside, I'd say the levels that you're watching out here are going to be the bottom of the daily profile is 313. The bottom of the weekly profile is 321. You choose either of those. Just go take a snapshot of this screen out there. You'll have that data for you. But Broadcom should continue to rally, and it should continue to rally up towards your 350 concern. I'd say that's 354.12. So, Tom, as always, thanks so much for taking the time to write in. Much appreciated. And have a magical Monday. Coda, nice to hear from you. Would like to take a MSTR. So let's pull that up on our screen out here. This must have been crushed over the last couple of months out here, but I don't recall. Take a look at the chart. But what it did on Friday out there, Code, is it confirmed a Rhodes momentum indicator bottom and a TD9 count bottom pattern. So on a daily time frame, MSTR is getting ready to rally, and if it can remain above 131.37, that's its red oscillator and change line, it increases the odds of a further rally. The further rally ought to take it up to the top of its profile, and that's at 153.41. Now that may not be the end of the move. The end of the move could be up at the 165.73. That's its TD9 count breakdown resistance level. The daily time frame Coda has a bottom. The weekly, not so much. Now, I see a wave number 7 signal. Let me just open this up out here. See if it's a valid one. Yeah, pretty, but yeah, it is. Yeah, but I've also got one that was negated on this last run. This run from the tie on July 18th down here. So I don't know. Here's your struggle on MSTR as well. So on the daily time frame, you got a bottom. The weekly says, and you can see it here, right? You visually see it, don't you, Coda? Where is the resistance point in MSTR? If you were to take a long position there, where is the proof out here that this is ready to really do something more than just a little counter trend move? We'd have to say it would be a close above that red oscillator and change line. So you've got profile resistance on the daily at 153, oscillator and change line right now 150. On a further rally, that probably gets up towards 153 out there. Watch that red oscillator and change line on that weekly time frame chart. If you get a close above it, that would be a bullish positive outcome. On a monthly time frame, you can see the A to B equals CD pattern. We don't have any kind of a bullish reversal candle. We're in bar number 7. So I would have to say at this stage, until price closes above that red oscillator and change on the weekly time frame, we're just seeing a counter trend move. I know it took a little while to get there, but that's how Stevie's mind operates. It usually takes a little while to get there, but once we get there, it's usually a pretty good ride. Let's go take a look at Woof. This is for Captain Dan inside the Tiger's Den, WOOF. Let's get that up on our screen. Almost sounds like a radio show out there. And WOOF formed a nice Rhodes momentum indicator bottom pattern, Captain Dan, on Friday. It also confirmed a TD9 count bottom pattern. It's completing today. Now you have a new profile that formed on Friday. You've got the bottom of that, or support, I should say, is at the price point of 252. So watch that. We've tested and rejected that. You've got an oscillator and change line, which is a resistance level above at 264. The center of the profile, 267, and the top at 282, and TD9 count breakdown resist at 293. So we got a bottom on the daily. But what do we have on the weekly? We don't have a bottom. We have price trading. Well, let me pull it back just a little bit further, make sure I'm using the right swing point. 2 swing points that we can use. A TD9 count swing point, that's one I would prefer to use, and that's one back here on August 16th. And the volume here was 19 million shares. We came down into it last week with 8.2 million shares. So that's nice, but you're still inside that swing point. And that means either you got to close it above 282 to reject it, or maybe you get all the way down to 223, the bottom of that. So the daily's got a bottom pattern. I'd say the weekly, unless it gets above that oscillator and change line, this is just a counter trend move as well. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. What a great sports weekend out there. It warmed up nicely down here, nice enough to get a couple rounds of golf in. So that was nice. The Olympics have been kind of weird, and I love the Olympics. I love watching the Olympics. Of course, I'm going to go play my sports before I'm going to stay home and sit and watch something in front of the boob tube. But it's actually been kind of, for me, it's been kind of hard to even find it. It's like it doesn't even exist out there. And I'm not a streamer, okay? So I'm looking for it on regular, satellite TV stations and stuff like that. But I tell you, the Super Bowl, I thought the other games up to the Super Bowl were, quite frankly, better than the Super Bowl game. Super Bowl commercials, my favorite was the Budweiser halftime. I thought that was the disgusting halftime show. Worst I've ever seen. I don't understand. Roger Goodell should be fired, in my opinion, for putting on a show like that. That's Stevie's opinion out there. But I thought the best basketball event, I know it's on the USA Network, and I do have that on, but thanks, Dan. The best basketball event that I think I saw over the weekend was the Duke, North Carolina basketball game. Was Saturday night. I don't know if any of you caught that game. First of all, that rivalry is just one of the coolest rivalries around in college basketball, but there's many of them. And what an extraordinary basketball game that was. Just North Carolina, and it was at home. It was at North Carolina. I don't think they beat Duke at home, and they had to come back. It was one of the largest comebacks you've ever seen. It was really great. Anyways, let's get back to requests out here because I don't want to mess up and not get to all of these. So the next one coming in is from Texas, Tom, who'd like to take a USO. Tom, USO is traded above its green oscillator and change line and its profile for its daily time frame. That's in breakout mode, and that says that it wants to go tackle its most recent high. It's trading into the swing point from back on January 29th. The low of that swing point is 78.17. We're at 78.16 right now. Volume on that candle, 13 million shares. So far today, 1.5 million shares. So you're pushing it with much lighter volume. But nonetheless, if it closes inside there, there's no resistance, no reason for it not to gravitate up towards that level. The next area of resistance for USO, though, is at 78.90. And that's coming from your monthly chart. So we're going to skip from the daily on the left panel and go right to the right panel and take a look at that monthly chart. And the reason is because profile resistance for the weekly chart is up at 83.57, and you got to clear 79.80 first before we can say, which the chart is telling us, that it wants to make a move up towards 83.57. So that's what I see right now. We take a look at the USO. Tom also wants to take a look at Amazon, so let's get that up on our screen, AMZN, see what that is communicating to you and I as we speak. Amazon trading out at 209.67 now. So the daily time frame looks basically horrible. Weekly time frame looks basically horrible. However, there's an A to B equals CD pattern to the downside. So let's go ahead, and I'm going to draw it in on the weekly because it's if it's present on the weekly, it's present on the daily too. And this way we don't have to go back to the left side of the screen and figure out where we start and all that kind of stuff here. This just makes it easier. So now you can see we've attained the 1-to-1 level. So if today you get a bullish hammer candle on a daily basis, which is what you've got, you would then have a daily buy the D point bottom pattern. And that would then say or suggest that price should rally up towards 215.79. 215.79 is the bottom of its bullish structured weekly profile. Now, last week was only week one below that. If we have 2 weeks below that, it gives a different message. But right now, the question is that a false breakout? Still on the weekly, you would need a bullish reversal candle to confirm a bottom. But the daily, watch that out there. Now, Tom, I have no idea whether today's candle will be a bullish hammer or not. It is right now at 11:34, but it may not be at 4 p.m. If it's not at 4 p.m., then we may not be done moving lower out there. You need that bullish reversal candle to confirm a daily bottom inside of Amazon. On a monthly time frame, right now we've got a Rhodes momentum indicator top support at 197.07, followed by 169.79. So that's what's going on both with USO and Amazon. Tom, I hope that helps you out. Thanks so much for your request. Satish wants to look at PSX. Let's get that up on our screen, see what PSX is doing. straighten out at 157.98. It's going to go ahead and form a TD9 count top today. It'll complete that pattern tomorrow, Satish, and then price should pull back to its daily oscillator and change line. Currently printed out at 150.49. Now, the weekly chart is in an all-out bullish mode. So, too, is the monthly. The monthly is trading into a TD9 count swing point that had formed back in March of 2024. That swing point on a monthly base had 53 million shares. Today is what, the 9th? And we are up with a total of 17 million shares. So you got pretty nice volume. Yeah, you got pretty nice volume. PSX pushing that swing point. So right now, I think what you're looking at is a TD9 count top. Whether that is today or tomorrow, whenever that does start, Satish, you ought to see a 2 to 4 day pullback, with that target being that green oscillator and change on at 150.51. Now, if price were to close below that, the next target becomes the top of its profile, 143.85. So I hope that helps you out. Piper wants to look at OMDA. Get that up on our screen. See what OMDA is doing. OMDA is trading out at $11.33. And Piper, you've got a TD9 count bottom that is going to go ahead and confirm today, complete tomorrow. What should unfold here on the daily time frame is price should rally up towards 1312. 1312 is that red oscillator and change line for the daily time frame. The weekly last week has confirmed, or well, let's see, volume was 3.6 million. Last week was, OMDA's not looking good intermediate term. You just confirmed an A to B equals CD pattern to the downside. Holy shnikes. Let's see where this would take us to. This will take us to much lower price, $4.74. Now, here's the caveat. On the weekly time frame, Piper, you can see it's got Rhodes momentum indicator signals. If a bullish reversal candle were to form, it would confirm a Rhodes momentum indicator bottom, and I would take the A to B equals CD pattern away. But it exists right now. The daily time frame may just be a counter trend move up to 1312. That's what it's looking like to me right now, because we have that A to B equals CD pattern with volume out there. So that's what we see when we take a look at OMDA. Piper, hope that helps you out. Thanks so much for your request. Sat P would like to take a look at HubSpot. HUBS is its ticker symbol. So let's get see what HubSpot is doing. HubSpot trading out at about $234.24. TD9 count bottom today. Completes tomorrow. Price should rally up to 251.28. That's its red oscillator and change line. Now on the weekly time frame, let's open up this puppy, see if we can find an A to B equals CD pattern to the downside out here. Oh, we already have that drawn in. So what you're looking for here on HubSpot is a bullish reversal candle to confirm a bottom, Sat P. So the daily is now suggesting to us that this could be just a counter trend rally. If it closes above 251.27, well, it could be more than that. On a monthly time frame, HubSpot negated its TD9 count bottom pattern last month. That is not a good sign out there. So I think this is HubSpot is suggesting just counter trend moves. Oh. No, that's not really, man, that's what I see when I take a look at HubSpot set. So when we come back to this break, let's take a look at IONQ. Got Captain Dan and you want to see what's going on there. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We had a couple requests to look at IONQ, one from SAT-P, one from Captain Dan, and the one that we really don't like is last week. Last week, if you look at the weekly chart, confirmed an A to B equals CD pattern to the downside with 930 or so being the price target. The swing point from back in November of November 21st, 125 million shares was passed last week with 139 million shares. So you got an A to B equals CD pattern to the downside. Now, it's got some resistance to get through, which has already been tested and rejected, which is the bottom of the monthly profile, 31.98. So we're not going to see this move down until we get a close below 31.98. Both of you, that's a level to be watching. The daily, as I did mention, or if I didn't mention, it's got a TD9 count bottom pattern. And price will rally or should rally up towards 37, let's call it 38.45. The oscillator and change on it at 37.78 or so. But as price rallies, that number's going to rise. The center of the profile, 38.45. Likely a price target, could be just a counter trend move. If it closes above that, the top of the profile is 41.83. But the weekly chart is saying this is probably just a 2-day, maybe a 4-day, but just a 2-day counter trend move. But you got a nice daily bottom out there, and you got monthly hold and support, but it's that weekly chart right now. So the daily's got to really take over. It's going to be all about the daily. If this is going to be a bottom because of that weekly confirmed A to B equals CD pattern, it's going to be the daily, and the daily's got to close about 41.83 in order to give us any kind of a really bullish type message out there. So I hope that helped you out. I know you were both looking, I think, for a long position. I don't see it. CLF is what Mohammed is interested in. So let's go take a look at what Cliff's is showing us here. CLF printed out right now at 1187, gapping to the downside out there. So let's try to find some support out here. The support level that CLF hit on a weekly hit to this morning is its weekly TD9 count breakout level at 1110. Now this had it's got 2 TD9 count tops out there, and price might have found support. So Mohammed, price may have found support in CLF this morning with price getting back to 1110 and rallying off it. Now let's go look at the daily time frame. The daily time frame, what price is also doing is testing a TD9 count pattern itself. Now that swing point was back on January the 8th, 17 million shares. Today we have traded 18 million shares in 2 hours of trading. but that low is holding. Man, you got to love the TD9 count. So what this tells me, we're trading inside that swing point. That swing point, again, the one from January 8th, runs from 1168 to 1246. As long as we stay inside that swing point, we're at 1189, you'll get back down and at least retest that swing's low at 1168. You'd like to see a rejection of that swing point on lighter volume. We're not getting that today, that's for sure. I see a daily A to B equals CD pattern to the downside, so the daily would then need a bullish reversal candle to confirm a bottom pattern out here. This is the tough one. The monthly chart has pulled back and found support at its oscillator and change line, the weekly at its breakout level, and the monthly at a prior TD9 count. So we'll stick with the daily chart, and the daily chart says you got to at least get one more push lower to at least test that swing point. Now, if you close below and negate that TD9 count bottom, then what you're looking at is that 1110 number, because if you close below 1110, you're off to the 1018 area. So I hope that helps you off with Cliff's Natural Resources. Let's take a look at DT out here, see what DT is trading out. This also for Mohammed. DT right now is printing out at the price point of $36.32. It's not going to form a TD9 count bottom today, not unless we see some type of big sell-off here. It would need to close it's got to close below 34.57. We're at 36.30. It doesn't look like that's what's going to happen out here. So this is a toughie. What makes it so tough, Stevie? Look at this morning's rally. Right up into resistance, which is at 38.97. The actual high so far of the day, 38.90. So it's rallying right up into resistance. The TD9 count pattern is likely going to go away. You have a bit of a gap to the upside. A to B equals CD pattern. We probably can find one here on the daily time frame. Yeah, we most certainly can. Let's look at this. Let's spend a little more time here on the weekly chart. So the weekly chart, you've got a new profile that is forming with price trading below the bottom of that profile. The bottom of that profile right now is at 36.44. I don't like it. I think this is really telling us it wants lower price, and I think that lower price that it wants to eventually get down to is at least that 31.54 number out there. So that's what I see with regard to DT. CLF's charts were much easier to interpret than DT, at least at this moment in time, for Stevie's brain out there. Let's go take a look at double AP out here. AAP, this is for S&P inside the Tiger's Den. And the question is, I believe it is there any kind of bottom out here that we see? So let's go find out. Well, that can't, there we go. AAP, come on. Okay, I got to pull this daily chart back. Daily chart looks like this thing is in major rally mode. There we go. Okay, and it really has been. And what we do like about the daily time frame S&P is that it forms a Rhodes momentum indicator bottom back here on January 6th. Forms an A to B equals CD pattern to the upside, no bearish reversal candle, so that really is still in play out here. But prices trade above its TD9 count. It negated a daily TD9 count top on Friday, closing at 54.73. And now you're also trading above its TD9 count breakdown level at 54.73. So the daily says I want to rally further. The weekly says the same thing. We're trading above profile resistance, a red oscillator and change line, nowhere near as strong as green, but no reason for it not to rally further. And the monthly time frame chart, we're trading above the center of its profile. That suggests we may get a move up towards 65.89. So your question was there a bottom? Well, the bottom, if that was a question, was way back here in January, early part of January. But this is in rally mode for sure. Daily and weekly and monthly are supporting the idea of higher price out there. So that's what I see at double AP. Let's go take a look at you as well. Same kind of question out there. What kind of signals were generated on Friday? Thursday and Friday. So let's put you up on our screen, see if we can help out S&P here. So I've got you with a TD9 count bottom pattern that's completing today. So yes, S&P, you did get a bottom pattern on Thursday. Now what price is doing, it should rally up towards its oscillator and change line. That currently is printed at $30.09. If price can get above that, we'll see a move towards 32.52. That is the top of its profile. If price was able to close above that, Then we're looking at 33.19, the bottom of its weekly profile. Above that, we're looking at 38.35, the center of its weekly profile. And above that, 43.25, finally the daily TD9 count breakdown level out there. On a monthly time frame, we have a profile. That price, I believe, is trading below, but let me just make sure of that. The bottom of the profile is at 31.16. Yeah. Shoot. But the oscillator and change line is holding. If you were to start trading below 26.21, the monthly oscillator and change line, that would not be a good scene, S&P. So that's certainly something to consider. Of course, if you negate the TD9 count bottom, that means closing below the low of the session from February 5th out there, that low being 22.83. That tells you we have lower price. So the weekly and the monthly haven't bought into the idea of the daily bottom. And so all the heavy lifting, all the burden right now is going to be on that daily time frame, which right now should rally up towards 30.08. Steve Rhodes with TFNN. We come back to this break. Let's take a look at LGO for Dan.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got a nice, beautiful setup here at 11:54 in the morning. We've got about 5.5 minutes before the bar on this 2-hour NQ chart completes. Right now, it is trading above. It's going to negate a TD9 count top. It's also going to go ahead and form an A to B equals CD pattern. It's got a price projection in the 26,074 level. So the number you're watching at 12 noon will already have been signed off as 25,346.50. If the NQ closes above that, please don't short the NASDAQ out there. In fact, the ES Mini's got a similar pattern. I don't know if I have time to put up those charts, but go look at the 2-hour time frame chart for the ES Mini. If we're trading above that TD9 count top as well, you're going to have an A to B equals CD pattern that says don't short. Let's take a look at the next request that came in, which was LGO from Dan. LGO is trading out at $1.61. I don't have any kind of a topping pattern out here. We're trading above TD9 count breakdown resistance, which is right at about the $1.61. What is that? $1.59. So if you can close above $1.59 today, Dan, that's a beautiful thing. Your weakness in the chart patterns are the weekly time frame. It will complete a weekly TD9 count top on Friday, and that says that price should then pull back. Now, the first price target to the downside would be $1.51, the top of its weekly profile. If price were to close below that, then it would be about 126 or so. But the daily time frame is also triggered today, wave number 7. So that goes along with the weekly TD9 count top that's out there. That needs a lower high. To form, we've got a swing point on the daily time frame that has volume of 2 million shares. We are trading above it with 2.5. That's a confirmed A to B equals CD pattern to the upside on the daily time frame. So it's just the weekly right now. So is the chart that is in control here between now and Friday, and that ought to lead to a retracement out there. So I hope that helps you out. Real quickly, I'm gonna put up GL. XY, and this for S&P inside the Tiger's Den. Let me see if we get these screen charts up, Al. Keep the music low. So on a daily time frame, I don't have a bottom pattern. I just have price traded with inside its new profile. Resists up at 2178. I don't see a bottom signal on the weekly time frame either, S&P. We can take a look at it more in detail come tomorrow. Folks, stay tuned for all the great programming and have a marvelous Monday. Thanks so much for joining us. I'll look forward to seeing you again tomorrow, 11 a.m. sharp. Take care. Be safe out there.